It is TradeFinder Live, and it is 1 p.m. Eastern time here where I am. I'm not sure what time it is, wherever you might be around the globe, but we are happy to be joining you for this new revised session, new time, and I'm on camera. A lot of you have heard my voice for quite some time, but might not have ever seen my face unless maybe attended a new subscriber call or something along those lines. So this is me. I'm Zach. Great to meet you all. Hello, world. Welcome, and great to have you all with us. So, as usual, we have some housekeeping details we need to go over about the session, and then I will introduce Mr. Rob Roy. So, for anyone that might be new or joining us for the first time, welcome. We're always growing. It's great to have you on board with us. To go over our disclaimer, disclosure in a succinct manner, essentially, the only thing to take away from this is that we are not licensed investment advisors in the United States. So nothing in any of these sessions is to be taken as personal investment advice. Again, we have this on our website at all times, so please feel free to read it in your leisure there. Take a screenshot of it now if you like. That's the main point to take away from it. So we do have a Q&A process for this session. It's still the same hour long that everyone that's attended the previous sessions will be used to. However, when we get to the Q&A portion, just know that the rundown for this session is only Q&A, only written Q&A rather, so no voice questions will be passed through just due to time constraints for this session. But other than that, everything else remains the same. Excited to be back with you all, and especially with Mr. Rob Roy. So before introducing him, the market seems to be shaking off a slightly higher than expected CPI report. I'm wondering what exactly that means for the rest of this week, and of course, excited to talk some crypto. So let's go ahead and get the man of the hour in here, Mr. Rob Roy.
How you doing, Zach? Good afternoon on this Tuesday afternoon, and welcome everyone to our TradeFinder live market show. Pretty excited about this, and glad to be with you here. As we take a look at the chart, you can see that we are slightly higher at this point in time. We'll see where we close. That's always the deal when you have these live shows, but the CPI report came in just a little bit higher than expected, just 1/10 higher on the core and headline number. But if you look behind the scenes, it was really due to energy. So then when you took the core off, CPI ex food and energy, it was kind of in line, but the headline number was just slightly higher. That seemed to concern the market a little bit at the open, and then we've moved higher. So as I said, we'll see where we close. We're still right in this 45-degree angle here, right through there. Just exactly what you would expect, what you want to see. This move right through here, through the 45-degree angle ascent. If we take a look at the 10-day moving average, we hit the 10-day moving average on the low. We've moved back above it, and just no end in sight to the creep higher. But if you're bullish the market, that's what you want to see. If you're bearish, you're frustrated. I know I get all the comments on the U.S. market update. And by the way, if you haven't gone to it, we do it every weekend on YouTube. You can go to LA Wave Options on YouTube, subscribe there, and see the weekend report. And I know there's some frustrated people out there that the market hasn't corrected yet, some calling for a crash, etc. I don't really see a crash coming. The market's looking forward towards those rate cuts, but I do think that it could be a buy the rumor, sell the news event when the rate cuts actually get here. The market always looks ahead, and I think there'll be some people expecting the market to really take off when the Fed starts cutting rates, and I think it could be the opposite. I think that's where the correction could come in. But for now, as long as we continue this kind of move, and as long as we stay right around this 10-day moving average, you have to assume that the market is going to tick higher. These moving averages, the 10, 30, and 50-day moving averages are all just really parallel. They're just moving nicely. There's not a big separation. I always talk about the overbought condition when the 10-day moving average is separated from the price. Same thing happens with the 10-day moving average from the 50-day moving average, but they're not separating. They're just moving in concert, and that's what happens when you have this slow, steady climb to the upside rather than the more vertical moves that you've heard me talk about so often. I did want to share a couple things with you. One of the reasons that we're so excited about being here live is that ewotrader.com, we do have a live show that we do on Mondays for our subscribers at ewotrader.com. We did it yesterday. We do it at 11 a.m. on Mondays. And I wanted to show you a couple things that came out of that. We talked about, and this was in the Q&A, and this is a great feature of being an alert subscriber at Ewo Trader. You get to come to that show on Monday and the questions, and somebody asked a question about Oracle moving into its earnings report that was after hours yesterday. And I commented here that we had seen Oracle have a big drop following the earnings cycle 2 quarters ago. The last quarter, another big drop. And I just felt like I think Oracle is too big of a company, too well of a run company to get too far behind what's going on in the whole AI space, tech space, et cetera. And then if you had some discretionary money laying around, you could take a shot going long on Oracle. Well, that turned out to be pretty prophetic because there's Oracle today, if you haven't noticed that. So that worked out extremely well. And then actually during the live show, and this is with the importance of attending the live events, we were talking about TAP. TAP had shown up as a strong AI result in this wave 3 to continue to move to the upside. And at the time we started the show, this is about where we were trading. And I talked about it and I said, you may see this come out as an alert later on. But while the show was going on, the stock took off. And that's what happened with TAP yesterday. So you can see it's pulling back a little bit today. But if we walk it back, that was yesterday. So if you didn't attend the live show, you probably missed out on that trade because I'm not going to send out an alert on a move like that. So no alert ever went out. But if you're watching the live show and when we were talking about it, then you took advantage of that. So again, why we're excited about doing these live events. Hopefully we'll find some case study considerations that are similar to that. But go over to ewotrader.com and become a subscriber. And then on the software that a lot of you ask about, you can go to hub.com, hubb.com, and register for the new live version. It's going to have all this stuff that I'm showing you live, and we'll be using that in the very near future. So it's in beta form now. You can get it for free. You don't have to download anything. It's web-based. So take a visit over to hub.com and get that. As I said, you'll see me using it in the not too distant future. All right, so back to the markets. Little bit of a tick up in rates today with that slightly hotter than expected CPI. I don't know if it was so hot to cause great concern. At least so far, the markets aren't concerned about it. As I said, we still have a couple hours till the market closes. Anything could happen between now and then. But a little bit of a tick back to the upside here on rates, trying to hold in this 4.1 area here for the 10-year. So right through there. If we break below that, then we're probably coming down to 3.9, somewhere in that area. But for now, we're holding at 4.1. But yeah, as you would expect, you get just slightly hotter, you're going to get a little bit of a tick up in rates. But when we look at the 10-day moving average, all we're doing is touching the high of the 10-day moving average here so far. So maybe we head back down again tomorrow. We'll have to wait and see how that plays out. Looking at the dollar, a little bit of a tick back up in the dollar, as you would expect. We did break below, as I've talked about a few times here, that 104 level where we had been just pegged for over a month. Right there, we broke down a little bit. And if there becomes any whispers, and I just don't think the CPI number is enough, the PCE report was, I think, something that the Fed was happy with, their favorite inflation indicator. But there's no whispers yet of a potential rate hike, which there was at one point in time. Still focusing, even globally, the ECB came out. They're kind of even gave a date. The Fed hasn't given a date, but the Fed Fund Futures is pricing in June for a rate cut. The ECB came out and said perhaps June. So that's what the market's looking for now. We would take a big move higher, I think, here in rates to get the dollar to go too much higher from here. So looking at the rest of our markets, the DIA just kind of hanging around this 390 level. It ran up to it, and we just can't seem to make any headway above it. As I've mentioned numerous times in the past, we had this vertical move, or not vertical, but well more than 45 degrees towards the end of the years. I think there was some market rotation there from some of the big institutions, thinking that we might see weaker economic data early in the year. We didn't see it, not till last week with that ISM report that I talked about. And so then we've had a flatter ascent higher here, even less than 45 degrees. And we're just sitting right here around that 390 level. If we put the 10-day moving average on, we're trying to hold it at this point. And that'll be a key. If we can break above with a follow-through day, that 390 level, I don't see much stopping the DIA from going to 400. It's the tractor beam effect that I talk about all the time from Star Trek. The big numbers tend to draw them there. But we got to get closed above 390 with follow through. You can see we closed above, and this is why I talk about these rules all the time. I like to give you examples of them. We broke above it back on the 23rd of February, but there was no follow through day the next day. So you got to have that follow through day. It's very important. It's confirmation, and if we can get that, then I do think we see 400. Now the Qs. The Q is the one that we've been watching so much to see if we're going to get a relabeling of that 5. So far, it hasn't. When that wave 5 is just staying a wave 5, hasn't relabeled to a 3 yet. A little bit of a move back to the upside today. Maybe slightly surprising considering the fact that rates are ticking up just a little bit. Zach and I used to talk about the song remains the same, the Led Zeppelin theme here on TradeFinder, on the fact that normally if rates go down, the market goes up and vice versa. And that was the pattern for a while. And those correlations exist for a time, and then correlations break down. So that one's broken down apparently, because the last couple of times the market's done the opposite of what rates are doing, or doing what the rates are doing, if you will, when they were moving in opposite directions before. But still a nice update so far in the Qs, but no relabeling yet to make it to that wave 3. And then we take a look at the Russell, and look, we did it. We hit 210. We've been talking about this for a while with the move back to the upside. The trading range, if you've been watching TradeFinder for a while, you know it was 190 to 210 for the longest time. And then we broke down, and the range was 170 to 190 down in here. It just seems like the IWM likes to stay in these 20-point ranges. And so then we got back above 190 here in December, came down and tested it in January, took off. We're hovering around the 205 level, and we did yesterday. We got back there, or Friday, we got back above and touched the 210 level. So we're officially now in the range between 190 and 210. On the Russell, we take a look at the 10-day moving average. You can see we're right on it at this point in time. But perhaps that's what happens now for a while as we stay in this new range. And I just thought it was interesting to show that, because we've been talking about it for a while. Can we get up to 210, or is 205 going to be it? But we did. We made it up there. All right, so looking at a few of the international markets, we'll look at Australia. Some of these markets took off. We talked about this Thursday night in the Insiders meeting for our alert subscribers. And there you go. We had this trouble here at 24 on the EWA. For a long time, it sat there, had a bit of an ascending triangle pattern. It did break to the upside. No guarantee an ascending pattern is going to break higher, but it did. And now we're pulling back down a little bit. Got a little overbought there, a little separation from the 10-day moving average. Would have preferred, if you're long the Aussie, to see it hold that area there around the wave 3 high, but it hasn't. Perhaps it needs to come down and test 24, and that'll be the key. If it comes down to test it, can it hold that level before turning to the upside? But a pretty significant break higher there. And then looking at the EWC, we come over here. You can see that right here in this wave 5, again, the Elliott wave algorithm has called this level, and we got above 37. That was what we were looking for, to see if this ascending triangle would break to the upside as well, which it did. And right there within the tap box, time and price projection. So this is the legacy software, as I said, from Hub, and you can go get the live version of all this coming up to be released very soon. But you can get the beta version right now. So maybe the same thing here. It's holding in a little bit better because it didn't have quite the gap up type move that the EWA did, even though they were both in ascending triangles. So they broke out slightly differently. And we're consolidating here nicely back above the 10-day moving average, where the EWA, as you saw, was just slightly below the 10-day moving average. And then want to take a look at the EWG for Germany. They had some news that came out this morning, that said that their inflation was ticking down a bit, and you can see they're having a nice up day, which you would expect if they have weaker than expected inflationary data. And so that move in the EWG, which has just been mind-boggling, coming out of their own ascending triangle pattern here, or you could actually view this, which I prefer to, as a bit more of a symmetrical triangle rather than the ascending. But the other global markets were more ascending, so I like that just a little bit better. The bottom line is it doesn't really matter. I know some of you picked on me on where I draw my trend lines. I'm not trying to draw exact trend lines. I'm trying to get a general viewpoint. It's just aesthetics. What does the pattern look like? So whether trend lines are exact or not, to me, doesn't matter. It's just what's going on, consolidation in a triangle. So we could argue over where to draw the lines, but the bottom line is it's still a triangle. A big breakout to the upside, and it looks like it's going to continue. So now we'll have the same conversation here that we're having on the Qs. Will that 5 relabel to a 3 here on the EWG? But Germany seems to be the place to be right now. And then the INDA, which we always look at, which has just been powering ahead, is pulling back a little bit. But again, notice that it's just in this really nice ascent here, just a perfect 45-degree angle move. We broke out. This is kind of pretty classic stuff right here. So we had resistance in this area. We've diagrammed this before where we had a big flat with a complex C wave with that zigzag right there. You can go back and look at past trade finders and see that. So nice, perfect 45-degree angle ascent here. We are below the 10-day moving average. Anytime that happens, you want to keep an eye on it. But so far, if you don't like that line, you could just connect the highs and lows and see that it's in a channel. So maybe you prefer that we're in a nice channeling effect to the upside. And when you look at that, we're just kind of in the middle of it. So I don't think there's any concern about anything nefarious going on in the INDA, at least not yet. All right, so looking at some of our past case studies here that we've done in TradeFinder, you can go back and look at the recordings over the years. Our record is pretty impressive, I think. You take a look at RGEN. Now, this one hasn't been cooperating as well. We looked at this one back on February 6th, and we kind of got to the upside here, but not quite our target. We did state, to be fair, that thought it would get up to 220. It did move higher, but didn't quite make 220. And now we're consolidating, and it just seems to just be hovering here. And so my thoughts on this are still the same. As long as we can hold this consolidation above this wave 3 high, I think you stay long here. Perhaps we get some sort of a bounce up from this level. But if it were to break below that, if it were to break below the wave 3, then I think that's your stop. That's when you get out. But for now, let's just watch this consolidation and see if we get some sort of a break higher. GL that we looked at back on the 27th of February. Now, this one was in a sector that if you were really defensive minded, you would have thought, okay, this is where you want to be. Life insurance, health, all those things are defensive sectors. If the concern of inflation or further rate hikes was in play, those would have probably caught a bid. In this case, it didn't. So we broke below the wave 3 high that I just talked about in RGEN. And so with this one, we're now back to 125 being resistance. As long as it was above 125 acting as support, I think you stay long there. but it's broken below that. So that's one of the rare losers that we've had here at TradeFinder. There's only been a handful of them over the years. Honestly, go back and look at it; it's amazing. But we are going to close that one out and say that that one's a loser because it's below 125 and testing it. If it could have stayed above it, we would have stayed. But the fact that it's below it, we're going to go ahead and close that out and take that one as a loss. But on the other side of the coin, LIN that we looked at last week is doing extremely nicely, moving to the upside here. We thought it might go up to 480. It's not there yet, but it's at 472, hit a high of 473. That's awfully close. So it's been a nice move over the past week on LIN. So liking that one, like that move. If you want to take the gains now, I wouldn't be against that or argue against that. So I think perhaps higher moves ahead for this LIN. There's the 10-day moving average. So we're a little bit above it, but not significantly so today, but still moving nicely to the upside. All right, so let's see what we can find for today and see if we can duplicate what we did yesterday in the Evo Trader Live show. And I'll bring up the search parameters. There's only one on the impulse search. And by the way, these Evo searches here, these are pre-computed. So all you do is click the button and it comes up, the results. Now you can program this to find if you have your own favorite indicators and get your own results and let it run that. But pre-computed just basically means you click the button and the results are already there for you. And for those that are Evo Trader subscribers and have the software, you get my searches here as well. Also, on that Hub software, we've integrated AI into our impulse search, the directional search, and the signals that we get are from the data scientists themselves. So they send us the signals. We don't have the algorithm. It's proprietary to them. But with the software later in the year, you're going to be able to get the AI signals. So yeah, go to hub.com. That looks like. And so here's the chart today. And let me see if I can give you that was last night. So we'll give you a updated view of what's happening with it today. Sometimes if I do it separately, it will give us today's view. And well, looking at the pattern, you can see it looks like it wants to go higher. We're sitting right here above 400. And a couple things that I like here. First of all, the zigzag pattern that you can see, there's multiple ones here. So let's just go all the way back here. So we see a zigzag here. And that's right at the 61.8% level. And then it came back down. And look at this. This is a really good one to look at and tested the 38.2%. Now, why is that key? Well, that's key because when a stock has a pattern where you could have an extended C wave, and in this case, the B wave retraced, call it the 38.2% fib level, you would expect a 61.8% extension. That's exactly what happened. Now, when, according to Elliott wave rules and Fibonacci rules, if you're going to have an extended wave, which means it's going to go to the next fib level, so that's the 100% level, it will likely come down and test the previous fib level first. And again, that's exactly what's going on here on MOH. It's coming back and testing this level. And so we want to look at the DMI. And you can see that we have good separation between the two directional indicators. The ADX is turning back up, indicating that there's some strength there. I would have preferred to see that ADX get below 20 before turning back up. That's just a little picky thing that I like to look at. So I think right here, if we take a look at this, that we can view this, even though it was the only result that we had, we can review that as our official case study for this week's TradeFinder. So I'm going to make a note of that, MOH up to 430. And that should occur within a couple over here. So within the next couple of months, we should see MOH, and it may not take anywhere near that long. But I love the zigzag pattern here, the test of the previous fib level. Nothing's 100%. You can find great setups that don't work out, but I like this one. So we're going to go ahead and use that one as our consideration for today, and up to 430 will be the target area. And as I said on LIN, even though we targeted 480, if you wanted to take gains there, I wouldn't fault you for that whatsoever. That's really the main things I wanted to show you here as far as the markets. I got through that rather quickly, Zach. So if the folks have some questions, we'll go ahead and take those before we let everybody get on with their day.
Absolutely. Yeah, no, that was awesome, Rob. Thank you for a wonderful rundown on the markets. And yeah, you did get through it fairly quickly there. So I'm sure everyone is going to be okay with some extra Q&A time. Let's get right into it. So let's go ahead and start out with my favorite. As you know, NVIDIA. Will would like to know if we got a tractor beam coming up there to 1,000.
I do think so, Will. NVIDIA was having, before we started, I should have been watching that one all morning. It was on my watch list. It's having a nice up day today. There you go. There's today's bar. And we bring this down so where we can see where 1,000 is. It's in a wave 3. Even the tap box is higher than that. Two things to take a look at here. We talked about this yesterday as well. Is when you have a bar like this, even though it got overbought and overextended, when you get the retracement back down, oftentimes it'll go back and match that print, as they call it. And so it got close to 1,000. The high was 974, but it didn't actually hit it. So I do think there's a high likelihood, especially by the way it's acting today, when little hotter CPI didn't seem to affect this one too much, and moving to the upside here. I'm feeling like that is the tractor beam effect up to 1,000. Well, I think that's what's going to happen. Barring any further, it was just 1/10 higher on the CPI, but if we start to get some really bad inflationary data, that changes everything. But barring that, yeah, I think 1,000's coming.
Well, I am definitely in that camp. I hope that is where we end up, and I will have a smile on my face. I'm sure will as well. Speaking of another one of those,
Will.
yeah, another tongue twister here. SP would like you to cover now.
And we'll take a look at NOW and see what that one's doing today. We look at that one before as well. And we have this triangle pattern here. See if I can get you today's quote on now. Breaking to the upside. You could look at that. I wouldn't call it, as you know, I want that second day to follow through a confirmation day, but out of this little consolidating triangle here, nice little symmetrical triangle, it's trying to break to the upside today. And if we follow that through tomorrow.
Sorry, go ahead.
No, go ahead. What were you going to say?
I was going to say specifically, SP was saying, do you see the correction being complete at this point? So I think that's where you're leading.
Not yet, because there's false breakouts. And you have to be wary of that in the market. And that's why I'm always harping on you have to have a second day, a follow through, a confirmation day. It appears that way today, but the market gives you head fakes all the time, and it sucks people in when they think, okay, we're breaking to the upside, let's go long. And then it reverses. It may be going long. That's a nice breakout day today, but you have to have that second day. So if we get a higher close tomorrow, then I would say, yeah, that consolidation in there is likely over and the stock's probably going higher. But you got to have that second day.
Very well. Thanks for that, Rob. Let's go over to YouTube. Trade Simple would like you to look at Vale, VALE.
It's volley there, youngster. But we'll.
Tomato, tomato, right?
uh, and yeah, pretty rough day to the downside here. And you can see that we're at an area where it may hold, but gosh, that's not what you want to see breaking. It had a chance to hold 13 here. There was a lot of support right in this area. It went through. Here's our launchpad effect, Zach, and we just want to make sure that people are aware when you have this sideways consolidation, being from the Space Coast in Florida. We talk about that. You get blast off moves, but not always to the upside. It can blast off to the downside as well. So you can have what happened to Elon's big rocket, just destroying the launch pad and digging a big crater below it. And that's exactly what happened here with Volley. And so now, can it hold this level? It's oversold now, and 12 has some more support. And if it doesn't hold 12, then QU, Zach, what is it?
Good old KBTD.
Yep, that's a Katie bar the door if it can't hold 12. But all this consolidation with these big breakdowns being oversold, I'd be surprised if it doesn't try to bounce up. Maybe it doesn't go all the way back and test 13, but I would expect some sort of a small oversold bounce here. And then the key is bouncing down here. Can it hold this 12 level? That's really important if you're long this stock. If you're looking to go long, for me personally, even though we're sitting on support here, and I do think you could have a tradable bounce, I wouldn't want to go long unless we got back above 13 with a follow through, because that was pretty good support that's broken down.
Very well. Thanks for that, Rob. This next one I'm very excited to run by you. The symbol from Urish is BA Boeing, but the news that I wanted to add in there, I'm not sure if you saw this morning that the Boeing whistleblower was found dead from a alleged self-inflicted gunshot wound, allegedly. So,
Yeah,
yeah, we'll just leave that out there.
Yeah, I did see that, and I was talking about Boeing a few times, and I had mentioned when you go through here, and gosh, you never know what other bad news come out on Boeing was the commentary that I was making, and it was really trying hard to hold 200. Well, we found out other bad news that came out today, didn't we? Holy cow. So now it looks like we're going to come down here and try this support here at 180. And that's another good level of support. But 200 was huge. And the fact that it couldn't hold that is a little concerning if you're long this stock. But you can see going all the way back to the November, December area of 2022, 180 mattered. I remember when it broke above that back then, and you're like, okay, that was a major point of resistance that it got through. Well, now it's going to be a major point of support. And holy cow, I thought that there wasn't anything more negative that could come out on Boeing, and that it had a chance to hold this 200 level. Well, it didn't, and we heard the rest of the bad news. And so now we'll see if it can hold 180. And if it doesn't hold 180, then we're going back into COVID days, and who knows where it could fall. Another Katie bar the door type of thing if it can't hold 180. But it is a little bit oversold today, and we'll see how it plays that out. But surprising to me that it broke below 200, but it did.
Yeah, almost looks like a nosedive there, one might say. Let's go ahead and go to GLD. I believe you mentioned that one a bit earlier. I'm not sure if you covered your analysis there. As you know, I got some stuff going on behind the scenes here. So,
yeah, I know you're multitasking. I didn't cover gold yet, so I'm glad to ask about the metals. And your nosedive comment there was
you're not going to let that one just breeze by, huh?
I'm gonna let it go by. But
Bring
gold,
myself down.
this is not unexpected today. We talked about this yesterday with gold, that it had gotten awfully vertical, too vertical for me. In fact, if we walk back a day, you can see that, it's like pretty good separation here from the 10-day moving average, and that gold might need to rest. That's what we talked about during the EWO live show yesterday. And so that's what's going on today. Just a little bit of a rest day. I do think with the future, whenever it may be, coming of cutting rates, that gold continues with a bid. Now, how much further does it pull back? Is that it? Do we come down to the 10-day moving average? Do we consolidate here and let the 10-day moving average catch up? I think you need to watch that for a couple days and see. If you're already long, I wouldn't get out. I would stay long. If you're looking to get in, I'd give it another day or two, see if it pulls back just a little bit more. And since we're looking at GLD, let's go ahead and look at silver, because this is one SLV where I think you could have a catch-up trade here. As we've noted in the past, for the longest time, gold was big brother and silver was little brother. And then for a while, with all the use of silver and electronics, et cetera, and the big tech movement, silver kind of took the lead and became big brother. But now it seems to be swinging back towards gold. And you can see a little bit of a move down here in SLV today as well. But I think there could be a catch-up trade here with SLV going up to hitting that resistance level at 23. And then you have to reevaluate, because that's pretty strong resistance there. And it's got a whole bastion of support all in this area, the main support being down at 21, but there's even a bit of support through here at 22. So just so much of this churning that's gone on for over a year between this 21 and 23 level. I feel like we could move up here and perhaps even slightly outperform GLD over the next several days. But I think the metals are going to. The only thing that would change the bid scenario or the bullish scenario on the metals is if we continue to get slightly hotter than expected inflation data and some whisper of a Fed rate hike comes back in. That'll send them down. But without that, I think there's some support under the metals moving forward.
Awesome. All righty, very well. Let's go over to the Goog for Emmanuel from YouTube.
So the big Goog or Goog with an L?
The big Goog.
Okay. Big. I was watching Google this morning, and this 140 level is the key. If it can get back above it, you've heard all the bad news that's come out there too, and they've slipped a little bit. Rare missteps for Google that seem to be able to do no wrong. Not too long ago, and they made a couple missteps, but there's some support here, and it's trying to get back above 140, and I think that's key. If it can get back above 140 with follow through, you can see the 50-day moving average, which is the royal blue line, is not far away. So if we can get back above that area with a follow through day, I think Google could play some catch up with the NVIDIAs and the SMCIs and all those other stocks that have kind of left them in the dust a little bit here. The management's taken a lot of fire, et cetera. They've admitted their missteps, but this level of 140 is what you have to watch. It could easily be testing it and roll back over. But once again, if it can get above 140, above the 50-day moving average with follow through, I think you could see it come up and fill this gap. But proof is in the pudding. It's got to do it first, but it's trying right now. So another good one to keep an eye on for the next couple of trading days would be key for the Goog.
Very well. Thanks, Rob. Let's go over to a question from YouTube from IC. Rob, thoughts on SQ? Seems like it wants to go to 100 to 120.
Yeah, well, as you probably are aware, they had their great earnings report. and I'm with you on that. It got overbought on the earnings result. Surprising earnings, but important. And the consumer spending number on the CPI was kind of in line. Nothing too great or poor, but the consumer is still spending some. But getting above 80, and this wasn't the greatest follow through day here. They had tried back here on the 23rd of February and came back down. And then we barely closed above 80 and had technically a follow through day because it had a higher close, but you'd rather see it close near the high of the day rather than the low. So it wasn't the most supportive follow through day, but the key is 80. As long as it stays above 80, I think you want to be long this. But if it breaks back below 80, then I think that's your stop and you got to get out and that's on a closing price, not intraday, because there's that gap down there that at some point will get filled. But for now, if it can manage to stay on a closing basis above 80, I think he can be long here. But like I said, if it closes below 80, then that's a stop. Kind of
Very well. We'll also have a symbol here for you. Sorry, go ahead.
I was just saying it's a pretty easy risk to reward trade there because it's sitting right on such an important level with 80. If it bounces, great. If it breaks down, you don't lose much and get out. So anyway, sorry I rambled on there.
No worries at all. I was going to say I was selfish in the beginning when I said Will asked for NVIDIA. Will did ask for NVIDIA, but the first symbol was PDD, so got to make sure we get that one in there. Thinking of strangle before earnings next week.
It's all this stuff over there. China's really struggling, but going through and looking at this, you can see that there was a big descending triangle. So our earnings is next week. I'll put the earnings on here. Yep, you're right. It tried to break down in front of earnings because there's the big descending triangle right there. I don't know what the options look like here. I'd have to take a look and see what the pricing is, what kind of a move is priced in. But I see why you like this pattern. It's a huge mouth, right? From 120 to 150. So you're looking for a 30-point move. When we look at these, the way I like to do strangles is you want at least a 10% move out of the stock price. So if the stock price is at 120, for instance, you'd want a 12-point move. Otherwise, it's not really worth putting a strangle on. So with a potential 30-point move, when you only are looking for 12, yeah, that's a good candidate. So then I would want to look at where's the ADX. This is where there's a little fly in the ointment for me. I prefer the ADX to be lower. Now, this could easily break big on the earnings report. Certainly, triangles don't need a low ADX to break out. It's just one other thing that I like to look at because when the ADX is higher, even though you have a well-formed triangle, sometimes they can still consolidate further and form larger triangles than where you are already while the ADX moves lower. So that's the only thing that's concerning there to me is that the ADX is not as low as I would like as far as forecasting an imminent breakout. And that's what the lower ADX does. It says, hey, we've been consolidating for quite some time. ADX is very low. We're likely going to break out sooner rather than later. Even though you have this great triangle with the ADX being higher, it could consolidate more, jump up and down a little bit more, and just cause a larger triangle. With all that said, though, as I prefaced in the beginning, a triangle does not have to have a low ADX to break out. Triangles break out with higher ADXs all the time. It's just an extra little, the cherry on top type of a thing that I like when putting on strangles before a potential breakout move. So I have to take a look at what the option prices look like to see, but it's certainly a great breakout pattern, no doubt about it.
Absolutely. I, again, echo that sentiment and great find there, Will. Excuse me. Our friend Bankaj has asked for Wingstop.
take a look at Wing again. Um, um, kind of broke down and then back to the upside with earnings coming up. And we're talking about, I think we talked about this Thursday night, coming down and holding in this 340 area. So we had this, and I know this is what Pankaj was looking at, that we had this kind of vertical ascent. The angle had changed. We had this nice 45-degree angle movement, and then it got vertical. And then it would come back down. And if I remember right, I think Pankaj had puts there. And so it's bouncing a little bit today. But remember, when you get these overbought trades, they're quick ins and outs. And that may be all the move down that you get was those two moves from Friday and Monday. And then heading back up a little bit today. So Pankaj, I don't know if you're still in the puts or if you took them off. You do have a slight chance of getting a move down here towards 320, but I think that's probably going to be all that you get for now. So if you're still in the puts, you watch the 10-day moving average. It's hitting it on the high today, and obviously today being up is a little concerning. But if it gets back above that 10-day moving average, I think you got to get out of the puts. But you could hang in there a little bit longer if you wanted to, and see if we get turned back down from the 10-day moving average. So that one's a little trickier. But when you do these vertical ascents, you got to be quick on the trigger. They're 1 or 2 day corrective moves. So I hope you're still profitable on that.
Very well. Thanks, Rob. Mr. Softy. Blast from the past there for you.
Yeah. I'm surprised you're old enough to know that name or even know what that meant.
I pick up some wisdom from the old heads.
What are you trying to say? But you can see here, Microsoft held 400. Will, there's another one of your tractor beam effects. When he was asking about it before, look at that, how it just drew it right to 400. We broke above 370 and just bam, right there. And now it's held it very nicely. Tested the 50-day moving average. It's tested 400 numerous times. We have earnings coming up. I think Microsoft looks well positioned. We'll see what it does before earnings, because if it could break above 420, it'll likely run in front of earnings. And then I don't know if I would want to hold it through the earnings report then. But if it stays in this range before earnings and some volatility comes out, et cetera, then that could be a pretty good play into the earnings report. But it looks great here as long as it holds 400. So a little range bound. But as I said, if it breaks above 420, it probably takes off. So that'll be a fun one to watch. I don't know that I would do anything today on Microsoft. So if somebody's looking for an entry, it's pretty easy. If it breaks below 400, because how strong this ascent was, it'll be at 380 in no time. So that could be a quick 20-point move. Or if it breaks above 420, it could go anywhere, possibly even 500 if it broke to the upside above 420, and then we see what happens on earnings. But so when it's range bound like that, you watch for a break between one of those two channel lines. And looked at Microsoft in a little while. That was good.
Agreed. Julia would like to know if it's time to get into AXP.
We looked at American Express recently as well, and they're in the area where the higher end consumer, they had that little gap up and didn't like that. They filled it now, which is to be expected, and it's trying to hold 220. And let's take a look at the DMI here. If consumer spending trends hold, the only thing that would concern me is if that ADX breaks below 40, but you would expect it to come down on consolidation and with an earnings report coming and the consumer spending trends that we've seen, it could very well have a nice breakout on earnings. But yeah, I think you could take a shot at it now that it's filled that gap. As long as it holds 220, understand that if it breaks below 220, it probably comes to 210 rather quickly. So that's just something to be aware of. But as long as it holds above 220 here, it could see a continued run into earnings. Same type of thing here as we talked about with Microsoft. If it does run into earnings, I don't know if you want to hold it through earnings report. But if it consolidates into it, then perhaps there could be a breakout on earnings. But yeah, I think you could take a speculative long shot here as long as it stays above 220, knowing that, as I said, 210 is in the cards really quickly there if it doesn't hold it. But at least it's filled that gap and holding 220 there nicely so far.
Second symbol from Julie is going to be FTNT.
Good old Fortinet. Holding above 70 is the key there. I left the earnings report button on, so you can see it's got earnings in the not too distant future as well. So 70 was resistance. It's broken above it. It's testing it now, at least as far as right now. It's holding above the 10-day moving average. Again, we don't know where things close today, but so far, so good. And same type of thing here. It's a pretty easy risk to reward read here. As long as it stays above 70, you can be long. If it can break above that wave 3 high, then likely it goes up and hits that tap box high where the wave 5 is. But if it breaks below 70, there's not a whole lot of support there. There was some zigging and zagging going up here on the move up from 50 to 70, but it doesn't generate a whole lot of support. There's a tiny bit at 65, and then after that, you're back down at least 55. So 70 is kind of key here. So I think you can, if you're long, you can stay long as long as it stays above 70. But if it breaks below that, I think I would get out.
Very well. Isaac would like to look at XBI, have a key level at 95.
Yeah, I was wondering when somebody was going to ask about the XBI again, it had that big run, came down, filled the. If you want to, this is another defensive sector. If the economy is going to weaken a bit, which I expect that it will, I think we saw the first chink in the armor with that ISM services report last week. You would expect this to catch another bid. It's pulled back down a bit for two reasons. One, it got overbought with this gap up move. And then we had the softer PCE report. And so some of the concern about Fed rate hikes went away and the Mag 7 took off again. And so a little bit of pullback here. So a combination of both of those. But I think that if you want to be long the XBI, as long as it can stay here above 95, then I think you could take a long position there. There is really good support at 90. So even if it breaks below 95, below this wave 3 high, there's tons of support down here around 90. So if you could stomach that move from 95 down to 90 and stay with it for a longer period of time, I think a few months from now, you'd be pretty happy. But for now, and if you're looking for less risk, if it broke below 95, I would get out. But coming down here, filling the gap at an area that could be support here at 95, I think is interesting. So a lot of these are right on major support resistance areas. So follow the risk management.
Seems like we have some action ahead, potentially. So,
Yeah,
second question from Isaac here.
Yeah.
Second question from Isaac here is it true that if wave 4 is 38.1 or less, that you just look at the 61.8% extension first?
Yes, in a zigzag pattern or in a wave 4 correction, if the corrective level is 38.2 and it starts back up, the target price is 61.8. That's what's supposed to happen. And understand that when it hits 61.8, it has fulfilled the zigzag guidelines or rules. Now, once it gets there, like the one we looked at earlier, they could, all these zigzags or wave fives, et cetera, could have extended moves, but they likely come back and test the previous fib level first. So whether or not it does that, it doesn't do it all the time, but a lot of times it does. But for us at EWO, what I like to look at is once that 61.8% level is hit, what is the likelihood? What are the odds that it's going to go to an extended level, or is that it? Is the 61.8% it? Because again, highlighting that it's done what it's supposed to do. But oftentimes they will have an extended C wave, and I look at the DMI to get an indication: is this move tired? So is it likely that's the end of it, or is it still really strong? And the likelihood is it goes to the extended level. But the answer to the question is yes, you're right. If there's a 38.2% correction, whether it's in the B wave of a zigzag or the wave 4 of a 5-wave pattern, the first target price is the 61.8% extension.
Very well. Thanks for the added clarification there, Rob. Very helpful insight. Let's sneak in Palo Alto for over on YouTube for D Patel.
Yeah, it had the big bounce back following the huge move lower, and now it's come back down. And I find it interesting again here in this area. So we got so oversold, and I can walk it back. Another really cool feature of this software, and then you can see, bam, that was pretty oversold. And so then we got a bounce back up. Came back up to the 50-day moving average, and now it's gone back down, and it's in an area of pretty good support there at 280. This is a well-run company. It's in an area that is in need. Microsoft they got hacked. What was it? Was it Friday, Zach? I mean, we were talking about that. They went through a major hacking thing, and so these kind of companies, the cybersecurity, are always going to be needed. So I kind of like this one right here in this 280 level. So once again, a pretty easy read here. If it bounces above 280, it could be off to the races. If it doesn't hold 280, it still has a lot of support down here at 260. So if you can stomach the risk, knowing that, hey, it could break down, but it probably holds 260, then you can stay long here. But I find this one really interesting, and we might even be doing a speculative trade for our alert subscribers on this one for the reasons that I mentioned.
Very well. Well, thanks, Rob. That was a phenomenal session right at the hour, and gave some extended Q&A. I'm sure there's no one that's upset with that. If we do want to finish off with one more symbol for this evening, that will be or today rather. I'm so used to saying this evening from our old format. It's great to be here during the day during live trading hours, and on that point, it is live trading hours. So I know you and everyone else, myself, needs to get back to the market. So let's go ahead and finish up on UAL. And I just want to thank everyone for joining us live. It's been always a pleasure interacting with you all, and this new format has been really exciting. So I'll pass it back over to you, Rob.
Yeah, it's fun doing it during market hours, and it'll be even more fun using the live version of the software. So we can literally watch things happen throughout the hour as the Elliott wave patterns play out. So again, go to hub.com and get a copy of it, because I'll be using it here very soon on these live shows, and it's going to be fantastic to watch that happen. So United has come down here. It's sitting on its 50-day moving average. There's the oil pulled back from, and that's the big nemesis for any of the airlines, right, is the cost of fuel. With oil backing off, USO backing off that $75 level, I think that could be a little helpful here. It's in an area where we had this big triangle, and now it's come back to test where that triangle point was. That happens. They break out, they come back and test them. So we'll watch and see what happens from here on UAL. But it's right at a 38.2% fib level. So we're testing the breakout point. We're at a 38.2%. If it's going to hold this is where it would hold. In other words, if it's going to turn around and go back to the upside, it should hold right here. It's done what it's supposed to do, broke out, testing the breakout. We're at a strong fib level, not the strongest. I still like 61.8% better, but 38.2 is a decent one. And so if we can hold and continue higher from here, this is a point where it should move from. So yeah, really exciting to be here during market hours, and look forward to moving through the future. Thanks for everybody that joined us, and I hope you're enjoying this new format as well. Thanks, Zach. Great to see you on camera here now. Everybody can see your young, good-looking face, and so look forward to seeing everybody again here next week. So enjoy the rest of your week. Take care, everybody.